Hello everybody. So this video is entitled No Break Yet. Rapid fire. I want to just talk about a few stocks. We're not getting a bounce. We're not getting a break or ever so little in the market. So let's get started. As usual, I talk about strategy. My strategy videos get a lot of interest. Strategy is down today, minus 4.5%. We're underperforming Bitcoin. That's okay. We outperformed Bitcoin yesterday and the day before yesterday. Now, why was strategy spooked potentially? Well, Bitcoin dropped a little bit towards the end of the day, but that's not the main reason. In my view, strategy got spooked because of Stretch. Stretch opened down, people got freaked out, and it actually opened down because today was the ex-dividend day. Ex-dividend day, which means that was the first day where you could sell Stretch and still get the dividend. And in the middle of the month, we might get this arbitrage going on of people buying it the day before and then just selling it, and that leads to a sell-off in the stock price. But look at the speed at which it recovered. It was pretty insane. We dropped to 99.5 and we recovered almost right away. These ex-div dates in the middle of the month is also the reason why we might have a problem getting volatility under 3%, 2 to 3%. So it's no biggie. It's amazing to see it go back to 99.99. We have one day where he likely did an ATM. He'll likely be able to ATM tomorrow, and so that is a major deal. Now, I want to talk about the most frustrating stock. I mean, strategy has been very frustrating, but strategy is rebounding a little bit lately. HIMS is just slow bleed after slow bleed. HIMS, I've called it the punching bag on the market in prior videos. It's just there's just so much FUD. The biggest FUD, of course, is that HIMS seems to be trading on GLP-1 news, even though, as I outlined in my last video on HIMS, max HIMS is going to be 25% GLP-1 next 12 months. That's the max. And so there was some negative news around GLP-1 today with Lilly, and so maybe HIMS fell in sympathy, even though most of the business of HIMS has nothing to do with GLP-1s. It's just what the market has decided to say. This is despite getting some bullish news today. Here's from Nurse Gerber, but I don't know if he's the one who got the news out. I don't really know with X, but the point is there's rumors and the odds on Kalshi are something like 90% now that this is true. It's the whole idea that they are launching new medications, new products, and they are having a Super Bowl ad, and so that would be logical, right? Because they had a Super Bowl ad last year, and last year it boosted the stock when they had a Super Bowl ad. And if they would be launching their cholesterol medication, well, that would be a big deal, because getting a cholesterol medication like Lipitor, for example, is the same issue as it always really is with traditional healthcare. It's like you gotta go see your primary care physician. They may prescribe you a statin, or something else, but they, for example, want to see you again, a month later, 2 months later. And so you end up having multiple doctor visits, multiple follow-ups, even though these drugs technically cost pennies, since in the traditional health system, it's doctor visits that you have to pay, every follow-up. You don't have to pay those doctor visits with HIMS. That's the big innovation of HIMS. They bundle the cost of the medical care, the prescription, the medical follow-ups. All of that cost is bundled in one simple payment for the medication. And so I think that's a major deal. If they launch these cholesterol meds, I would be pretty excited to see that, actually, and it would change the narrative from just weight loss. So I'm happy about that. I think it's going to happen. I think we're going to get a Super Bowl ad. HIMS, as far as the valuation, we are officially back under 0.1. This stock's valuation is a joke. It's a complete joke. There's so much FUD about this stock out there. Anyways, people love to short it. It doesn't bother me. I don't do options or anything short term, so it doesn't bother me. But over the long run, remember, this is a stock we've been following for years. So over the long run, I sleep very well at night with HIMS in my portfolio. Moving on to Tesla. Tesla is still not breaking out. We went up to 480 not too long ago. We're slightly down. The stock is kind of boring, and this is despite news that is absolutely not boring for Tesla. There's two pieces of news that I can think of. The lithium factory is officially online. I guess there's another one, the redesign of the Cybertruck. This is all related to the auto business. The auto business, in my view, is not very relevant for Tesla. The future is relevant for Tesla, not the auto business. The auto business is the past. The big deal is the fact that they are moving to a fully monthly subscription business model for FSD. That means if you look at the valuation, they're not going to sell FSD anymore. They're going to become a subscription company, a subscription-only company. And people tell you that Tesla is a car company. No, it's a subscription company. And of course, that's the most profitable business model for them. If they move to an FSD subscription option, remember, they have a fleet of millions of vehicles who can add FSD as it gets better and better, as it gets more and more buzz online and people, praise it for its ability to drive. I believe FSD is essentially solved. FSD is the winner, and people who have not purchased it, they're going to be getting that subscription. That subscription to FSD is likely not going to be too cheap, especially if FSD is that good, in the hundreds of dollars a month is what I would presume, or at least they'll raise the price to that. So to me, that's a great model. I like it very much. Moving on to Grab Holdings. So Grab has caught my attention today. It's actually down quite a bit, down 32% from it's a peak that it reached twice in a matter of a month. It's down about 32%. I've always had an interest in network companies and network effects companies, but not necessarily Uber, not necessarily DoorDash. I find the valuation nosebleed for these two. And in that sector, I've said before, Grab is kind of interesting. I've covered it on the channel before. It is very much interesting in that sector. It is the leading app, the leading rideshare and the leading food delivery app in Southeast Asia, so think Indonesia, Malaysia, Thailand, Vietnam, all Southeast Asia, big region of the world, right? And To me, this is getting interesting. This is still too expensive, especially on EV over GP over RG. Rule of 40 is not achieved quite yet. But if this stock keeps dropping, perhaps towards the $3 range, I might be interested in that one. I realize the numbers don't quite exactly fit my spreadsheet, but I like the network business. And another point is, of course, we talk about self-driving. I'm not so sure we're going to have full self-driving bikes. They have a lot of bikes over there in Southeast Asia, two-wheelers. I'm not so sure we're going to have self-driving two-wheelers so fast. And they are gaining a lot of market share. So I find this stock interesting, definitely still pricey at this point. But this drop is interesting. This stock has been stuck in a valley of despair for 3 years. It's simple as that. It's backed. It was trading $12, back in 2022 or 21. This stock. So you're still talking about a stock that's 3 times cheaper as it was in 2022. So these growth stories, they've been hurt quite a bit by this brutal market of the 2020s, this brutal decade. These innovative stocks have been hurt by this brutal decade. Anyways, the banks are up today. Go figure. The banks are up today. Yeah, you want to buy a bank? Anyways. Okay, finishing up here with the market. The market is still struggling, giving AI operators, AI data center, cloud data center operators their full value. Of course, Nebius is the pure play here in the sector. Nebius is in my view, one of the better companies. I prefer Nebius over CoreWeave. I prefer the numbers of Nebius over CoreWeave. Major contracts predicted to between 10 and 20x revenue over the next 12 months. This company is still trading at a teeny tiny 0.05 on EV over GP over RG, so even cheaper than HIMS. And remember, my spreadsheet is very sensitive to the growth numbers. Very sensitive. I'm predicting insane growth. That's why the stock looks so cheap, right? Grab would start looking very, very cheap if I was telling you that Grab was going to grow at like 40 or 50%. Unfortunately, this one doesn't grow as fast. This is a company that grows very, very fast. And CleanSpark. So CleanSpark, of course, is a Bitcoin miner, so I can't put it in my spreadsheet. It doesn't really fit my spreadsheet. But CleanSpark never went back to the valuation it had reached back in October, past $20, nearly trading at $25, even though I believe that valuation back then was the correct valuation. Sandersville is the first site that they will convert to GPU compute. And we know there's an announcement in the works at some point. I can only assume the stock gonna pop when we get this announcement. But CleanSpark is one of these stocks that the market has loved to hate. The market has loved to hate this stock. But as we've seen with Tesla, a stock cannot stay in a valley of despair forever. Eventually, the market catches up. I look at CleanSpark, I look at NBIS, I find them to be opportunities right now, even though kind of my bag is full in these two stocks. So is it full for HIMS, and so is it full for MSTR. So anyways, a very slow January, a January where sales continue in this market, and of course, I'm specifically talking about hyper growth companies here. I'm not talking about your value stocks. I'm talking about your growth companies. As far as growth companies are concerned, the sales are still on. This was not investment advice. This is not financial advice. This is only entertainment. Hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful day.